Good morning. Our first look at the first quarter GDP from this year comes out much slower than they were expecting. 2.0 came out 1.1%. Let's get ready. And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Prep for Thursday, April the 27th. My name is John Hoagland. Thanks for trusting me with your time. As always, we always try and focus on finding accurate context, thinking about risk management, and remaining patient in our trading. And it's going to be maybe a little bit crazy this morning, so make sure that you remain patient, almost Zen-like, if you will. We did have some economic numbers come out this morning, the 7:30 GDP, the advanced number. Then next month we'll get the preliminary, and then we'll get the final a month after that. The last quarter of last year was 2.6%. They were expecting a guess here of 2%. It came out 1.1%. So the economy expanding at a slower rate than they were expecting. Jobless claims were also lower. They were 245 last week. 248,000 was what was expected. It came out 230,000 initial jobless claims. Continuing jobless claims also fell. They were expecting 1,878,000. It came out 1,858,000. We're still waiting for pending home sales, which may also be an impactful number for us today, and for you natural gas traders, if there are any. 9:30, the nat gas numbers come out. So we've woken up this morning to the market looking good to the upside, and I think about a lot of that is a little bit of relief this morning because we're one step closer to raising the debt ceiling so we don't fall into default. There are still many more hurdles for us to get to that, and it's going to be increasingly impactful on the markets the closer we get to June. So again, still a lot of hurdles, but just a little sigh of relief from investors and traders alike. Ad sales apparently brought some good revenues to Meta yesterday. We saw the market jump after the close yesterday. This morning's earnings mostly looking pretty good. MasterCard beating on both categories. Eli Lilly, one up, one down. Merck a little bit better. AbbVie, one up, one down. Comcast and Caterpillar both beating on both categories, revenues and earnings per share. After the close today, we have Amazon, T-Mobile, and Intel. Amazon, of course, $1 trillion cap company, so that's going to be probably impactful if there's anything unusual that happens there. Crude prices continue to push lower. We've closed the gap. Seems demand questions and economic worries are keeping price lower, which may not be a bad thing. Even with the drop in inventories yesterday by the EIA of 5 million barrels, the market still is trying to push lower. So we're looking forward to an interesting and challenging trading day as always. If you are in the markets, hopefully you've got things going your way. A lot of knee-jerking going on in the equities here after the GDP and the jobless claims numbers. The VIX is a little bit lower this morning, 1793 last I checked, where it was 1894 this time yesterday. Dollar index up a little bit this morning, 101.52, where it was 101.40 yesterday, and the yield on the 10-year up a little bit as well. 3.47%, where it was 3.4% yesterday. Make sure, as always, you hit the lucky like button, share, comment, question, feedback, heckling, and lover. always welcome. Subscribe to our YouTube channel. You get notified when we do go live. We do have the podcast today at the end of the day at 3 o'clock. You'll get a chance to see how Dan and Jack are doing. Don't forget, we do have one-on-one coaching for those of you in the Trading Combine or in live accounts here at Top Step. It's free. Check it out on the website. Always a pleasure spending time during group coaching with everybody. I thought we had a really good session yesterday, and we're hoping you really enjoyed or will enjoy the recording of Jared Tendler's session last night. So we're going to be kind of jumping into the charts relatively quickly. We do have Make Hogue Money today. You can watch it here on YouTube, or I just put the link in. You can register for the Zoom meeting and watch it either way. The Zoom meeting is in real time. There's a slight delay in YouTube, whichever is good. We're going to see if we can't find some good opportunities for you to find good trades for me. Always a good time. I always look forward to it. So we're going to jump into the charts pretty quickly here. Let's take a look here at the daily in the S&Ps. I did not say good morning to everybody yet here. So Shaw, good morning. Yes, it's beef jerky time. Let's get down to business, right? Scott saw and he conquered. Shaw, you won the prize this morning, Shaw. John, good morning. Tim, good morning. Alfred, Bear goes long. Good morning, Rooster. Brian, Hagel matters. Pershatam, Dan, Zach. Yeah, we've hit a couple of weekly kickoff levels here in some of these markets this week. Always good to see a good opportunity come from visits from those levels. Goodwill RL is wishing everyone good fortune in trading today. Pete, good morning. Bill, NASDAQ, Pete, Joe, yes, stay calm throughout the noise. Always good advice coming from our good friend Joe Drinnen. Les, Rusty Golfer on NISA, good morning. John, Dan Trader, Jason, Shy T, good morning. Yarich, good morning. Been lurking in the background. Today's my first time chiming in. Hope to do so more meaningfully going forward. Well, thank you for chiming in and letting us know you're here. It's a pleasure to have you here. Travis, good morning. Vince Dowitzer, Philo Beto. It's right turn, Clyde. Trading for Animals, good morning. NASDAQ, what website do you get the earnings data from? I've got a couple of different ones. There's Financial Juice and investing.com. They're usually pretty quick with them. Investing.com. Robert, good morning. Bear goes long. And my first coaching call last week with John Doherty. Great man. He's a great man. I hope you had a good session. First coaching with JD next week. Excellent. Sarah Fide, good morning. Sarah Hall, prayers and love as always. Vlad, Phil, Alejandro, Philo, right turn, Clyde. Henry and Kyle, good morning, everybody. And if you do, and you take us up on that free offer to spend a little time with one of our excellent, very experienced trading coaches, let us know. Let me know how it went, and we're always looking for feedback and just let us know. It's always a good idea. Anne Marie, it's great to see you. Yes, we are doing our best. It is our goal. It is our hope for success for everybody. Good morning, JT. Good morning, Bluebell. And let's jump in and we get through these charts. We'll get to Make Hogue Money, and hopefully we'll all have a good day. If things don't go your way, don't blow up, don't get mad, don't overtrade, don't revenge trade. Step away, see if you can't calm things down. Let some of that venom that we all build in our veins when things aren't going well, so you can have the opportunity to make good trading choices. When I get emotional, when I feel that venom, the opportunity to think things through just seems to go out the window. So I have to find ways to just let go of that venom, and it's not easy, and it's something I've been trying to work on for 31 trading years, and it's still something that I have to be cognizant of when I feel myself getting emotional. I know I'm compromised as far as my decision-making process, and over time I've decided it's better to walk away, or just walk away for a little while and find a way to let go of that venom. Okay, I'm done yammering. Let's jump into the charts and we'll yammer about this a little bit. Okay. So, what did we do yesterday? How was the auction process yesterday? We had okay volume. I don't think it was all that tremendous. It was up a little bit on the New York Stock Exchange again, but we did not bring new business into the marketplace. The preliminary bulletin says we lost open interest of only about 700. Well, in an area such as this, an important level where we're dealing with the weekly kickoff low, I'm looking for inventories to change. They didn't. It did not change yesterday. So I'm giving yesterday's attempt at a downside auction basically a D. It's kind of a hollow move. We didn't bring new business. We didn't even get out of old business. It's like we didn't even have to do that yesterday. We see a little bit of excess on the daily chart here. Now, this excess was created basically after the regular trading hour close, after the earnings came out. So we had a big pop after the close, which kind of saved us and kind of put up this appearing to be an excess low. Look at what we do when we put in these excess lows. Here's a big excess low. A lot of excess lows here. The market continues to push higher. Some excess low on the daily chart yesterday. We did close basically right in the weekly kickoff zone. Weekly kickoff low was 40.78. We settled at 40.76, but we didn't spend a lot of time down there yesterday, did we? What about the GDP response? Well, we knee-jerked in both directions. Now we're right back to where the 730 bar started. We didn't have to do all of this. Remember, that's just an advanced number. That's just a stab at, an early stab at that, at what the true GDP is going to be for the first quarter of the year. They were expecting it to slow. The last quarter of last year was 2.6%. They were looking for 2%, came out 1.1%. Is that going to be good news or bad news as far as rates are concerned? With the debt ceiling thing, does anybody even care about rates anymore? That's going to be really something that is going to kind of take over the focus of traders over the next couple of months as we get closer to possible default. And we do, of course, we hope that that does not happen. So where are we? Well, we've got some overnight inventory to the long side here. We're basically right at point of control from yesterday, but we are holding some overnight inventory to the long side. Where are we? We're in value. Very little change in the perception of value. Price closed at the low here, but value remains higher and above that weekly kickoff low. GDP response. I don't think that's going to be that much of a player unless there's some sort of digestion that goes on among investors and traders throughout the day today. What about the TPO chart from yesterday? Let's look at it without the overnight. So we had a double distribution trend day. There was no, that was the day before. We had the late spike. We accepted price below the late spike. We had an attempt at a late spike yesterday that was thwarted. We settled at 76, and then we rallied from that point. Where are we now? Well, we're still in range. We're still in value. We're right at the volume point of control. TPO point of control is here, which is an anomaly, another anomaly down here. But both of these aren't pure anomalies. They were both checked yesterday. This one was checked twice. This one was checked once. So they're not really true anomalies, but they are sticking out there and they are visual targets. So, we're looking at overnight longs. We're looking at acceptance and value. I don't see that there's really that much of a repair due today. Overnight low is going to be, of course, something that we'll look at. Overnight high is, of course, something that we'll look at. But I'm going to have to, again, stress that I'm going to be staying patient because we are in range and in value. Value low for TPOs. Hey, it's our overnight low. Value high on TPO, that's pretty close to our overnight high. Volume value low here, pretty close to the halfway mark from yesterday. Value high and volume, a little bit higher than our overnight highs. So the extremes of the overnight are kind of looking like they're going to be relatively important today. Anything in the middle, I'm not really that interested in. Of course, opening range, if it's left at one extreme or another, might give a little bit of color to what I would be thinking about doing early in the session, even if we have a good opportunity to look for anything good. In initial balance, neither the high nor the low of the regular trading hour session. And again, what kind of excess are we seeing in this TPO chart? It looks low excess on the TPO daily chart. Looks like bigger excess on the daily chart. What are the longer time traders looking at? They're looking at a daily chart most of the time. What are they seeing? They're seeing rejection below a level that I believe should cause them to respond, and they didn't yesterday. No increase in open interest. Maybe today's the day they're going to make a decision and decide what they're going to do down in this area. What about crude oil? What the heck happened yesterday? My goodness. Open interest had a big jump yesterday. We added 36,000 on good volume on a push below an important inflection level. We closed the weekend gap that we put in when the OPEC decided they were going to cut production, but it's the demand that seems to be suffering here, and I'm okay with that if it's going to bring lower prices at the pump. It may take a month for that to happen, but I'm sure we're all going to be, probably doing a little bit of driving this summer, and lower gas would be good. That may also increase demand. So economic worries are choking demand. That's what the talking heads are all saying. And I'm okay with that. I'd rather have a economic situation and $2 gas, but I don't get to pick that. So the downside structure yesterday, I'm giving a minus. Pretty decent break down below that level. But when we added that open interest, what really happened? Well, let's take a look at the 30-minute chart here for a second. So the EIA comes out at 9:30. We get a little bit of a boost. We can't hold up here. The market tanks at the end of the day, puts in a really big late spike. I don't think that we have any overnight inventory. If I've ever seen a dead cat bounce, this is a dead cat bounce. The market drops and then just lays there. So there's this late spike is so wide as far as range is concerned, it's going to make it, I think, a little bit more challenging to find good trade locations today. The base of the late spike is all the way up at 75.63. It's $1.20 higher. So we can go through this whole range and still be marking acceptance of lower pricing. Of course, weekly kickoff low is in play here if we do get up to that level, and that's 75.50 weekly kickoff low. Market really started to accelerate once we got down below that level. And with that additional open interest, look at the volume here. That last 30 minutes was where all the volume came in yesterday. Longer time frame, adjustment of inventory. It looks, by the addition of that 36,000 contracts in open interest, that longer, stronger traders just jumped into the short side on this big move to the downside. Take a look at the TPO chart. So it's a normal variation day until we get the late spike involved. It's a neutral normal variation day. Something happened at the end of the day yesterday where traders, hedgers, they just had to adjust inventory, and they did. They got aggressive. Look at the volume point of control. All of this all day long, and the volume point of control is in the last few minutes of the day. Do we find buyers down here, or is this just all sellers? Here's where we opened, in the late spike. And again, this market can rotate all the way back up to the base of the late spike and still be hinting or marking acceptance of lower pricing. What's a late spike? Again, a late spike, and this is such a good example of it, a late spike is a market that kind of ranges for the better part of the day, and at the very end of the day, price moves away from balance and value and closes away from it. Well, the market closes here at 1:30 Central. So the longer time frame traders, they're done for the day, right? What does it mean if price opens in or below the late spike the next day? Price is still being accepted over time at these levels. It's marking acceptance of lower pricing. What about if it opens above the base of the late spike? Well, that's possible rejection of lower pricing. If we opened up here and rallied, this late spike would actually end up looking like excess, an excess low. Price got too cheap, sellers wouldn't sell it, buyers took over, and off we would go. So this market is marking acceptance of lower pricing. Because the size of the late spike here is so large, it's going to complicate things for our crude traders today. All right. Okay. Look at the range from last night, just kind of looking at this. Very narrow range, dead cat bounce. Maybe there's an opportunity up near the overnight high. Maybe there's possible extension below yesterday's low and the overnight low. What is a trader to do? How about the NASDAQ? NASDAQ and the S&Ps were such different animals yesterday, and it's showing also in the open interest. The NASDAQ added 5,300 in open interest yesterday. We saw a move below and rejection of the weekly kickoff low yesterday. Big excess on the daily chart. A continuation away from that low, adding open interest. Buyers. Did we attract buyers? So that open interest is higher, but in what direction is really kind of the question yesterday, because it was a very indecisive day on the chart, but that increase in open interest is, I think, saying something. Take a look at the 30-minute chart. All right, so here's yesterday. We looked higher, we looked lower. We had the big spike at the end of the day, which brought price, back to above the halfway mark of the day in the 30 minutes after the close. Settlement was down here. We never did settle below weekly. Well, I guess we did settle below weekly kickoff low a couple of days ago. But again, the earnings, pow. So it looks like there's excess on the daily chart. What about this channel that we're in? Well, we kind of rejected that by the end of the day yesterday. We were inside it yesterday. We're above it today. Is this a potential breakout of a channel or a bull flag? It certainly could be. It looks like we're going to be opening with a gap, which gives us another nuance, perhaps, of an opportunity, right? If we can't close the gap relatively early, we go in the direction of the gap. If we get back into range and start showing acceptance especially inside value, we could see the market rotate back near the low of this channel or the low of value from yesterday. So a lot of this is going to be relatively early kind of response in the NASDAQ. If we can't close the gap, even if we open with a gap and we close the gap and we find buyers there, then the move continues to the upside. This is a potential state changer here in short time frame. TPO chart. Normal variation neutral day. The kind of hint or the color of this day was largely to the downside. Did we add sellers down here or did we add buyers? It makes it difficult. But when we see value here and then yesterday's value overlapping to higher, there's also the indication that it's buyers that moved value higher. Gold. So our little breakout of the market state didn't bring direction, it brought range. We are setting up a head and shoulders pattern here. I'll be looking forward to some sort of breakout below or a failure of a breakout below and a continuation to the upside. But when we look at where we are here, we're relatively centrally located inside the extremes of the current area of balance. We added 5,400 in open interest yesterday on higher volume. There is energy coming into gold, but so far direction is difficult to read. We had that increase in open interest yesterday, but overall for the last 2 weeks, this 2 weeks, volume or open interest is up one day, down the next, up one day, down the next, up one day, down the next. Up. It's waffling. Open interest is not giving us any indication of direction. Well, there isn't any direction. This is range bound. So we're using range bound rules. We got to pay attention near the extremes of the range, which may cause us, of course, to try and stay very, very patient, which we all are always trying to do. Overnight inventory is already adjusted. We've got a potential bear flag here. We've tried to get above it yesterday. We failed. As a matter of fact, we can even move this up there, and it's still looking like a bear flag. We get a bear flag. We find acceptance below this level, and then we test weekly kickoff low and find acceptance above that. What's that going to mean for our BOM head and shoulders? I'm really kind of viewing the weekly kickoff low / last week's low as our neckline here. If that happens, we could see this market continue a move to the downside. We didn't look at the TPO chart, did we? Here's that bear flag. Doesn't include the overnight. Are we at risk of changing? We are. I'll be trying to keep a close eye on that throughout the day today to see if I can find some opportunity. This euro is very resilient. It is doing everything it can do to try and hold the current upside market state. Buyers are just not giving up. Yesterday, buyers added 6,300 in open interest on a high volume. On this convergence between the weekly kickoff high and this trend line. It seems to be a little bit magnetic towards that weekly kickoff level for now, but it's showing yesterday as an excess high. What did it look like on the 30-minute? So certainly an excess high. We found support yesterday at weekly kickoff high, support last night. That support is now broken. We're looking at last week's high as a potential area for an execution here today. The real execution would be when we failed to hold the weekly kickoff high as support, resistance. What about the TPO chart? Normal variation, very extreme. Normal variation, excess. Not so much on the 30-minute on the TPO chart, but the market pushed higher and then sat at the lows. The point of control is here. The volume point of control is here. This is a normal variation extreme day. It makes sense that we're looking lower. We had another kind of long liquidation day. Maybe we saw some sellers come in up above this level and increase that open interest. The market is really trying to hold that level, though. What about the 10-year? All right. We did close one day above the weekly kickoff high, but in the zone, really. There's nothing finite about trading. So we closed one day in the zone. Yesterday, on okay volume, we lost 2,200 in open interest. Long liquidation. It makes sense. You know, if I'm long and I'm up against resistance, I'm probably going to take some off. What was the response to the GDP? Here's the 30-minute chart. Move to the downside. Here's our close above. Here's our rejection on the following day, although this is a weak high up here. And then we've got, a pullback at 2 o'clock of 1:30. Now we've opened left range and value. There's a gap to fill all the way down to here. I'm going to put this out here, which is a naked point of control. That is a very visual target. What about the TPO chart? Weak high. Gap close. Naked point of control. It's a tough market to trade. We still know that we have this island low back here. And here's the natural gas. We had a big jump in open interest yesterday. Rollover is largely over. That jump in open interest to me is directional activity. Volume was pretty good. Here's the 30. This is kind of central in range. The big move yesterday was in the overnight, adding 1,900 in open interest. That's some trapped shorts in here. They look like they're getting squeezed as we speak. This B-shaped profile is showing long liquidation, but that's not supported by open interest. Open interest says we brought in sellers here, and they are getting squeezed right now. This market is vicious, vicious, vicious. Here's the TPO chart from yesterday. That B shape would indicate long liquidation, and it's a weak low. It's not a very strong low yesterday, but we probably trapped a whole bunch of shorts. Sometimes a weak low is nothing more than traders got too short in the hole, and they are getting squeezed right now. So, right. Got a couple of minutes before I'm trying to get the Make Hogue Money started, and I will look forward to seeing you all there. Yes, Dwayne, that is a TPO chart, market profile. There's some good videos on our YouTube page, things that I've done to kind of give you an overall view or a basic view of what the market profile is. You'll find those in the, where are they? If you find it on our website, they're in on the playlists, and you'll see a lot of the opportunities that we've put on there for education, knowledge. A lot of it's just me talking about market profile, what it is, how it works, how it's put together, and all of that. So check that out. What else? Make Hogue Money coming up shortly. Take your deep breath. Stay humble, grateful, creative, and centered today in your trading. Looking forward to seeing you all and make Hogue money. If not, have a great rest of the day. And I'll see you tomorrow morning on the market prep. See you in a little bit.